Good morning. Are you self-employed and wondering if your local bank can set up a solo 401k for you? The answer might surprise you, and knowing it could save you both money and missed opportunities. So thank you for joining today's daily webinar. Today's topic is, do banks offer solo 401k? We get this question quite a bit. We're also going to discuss your questions live on the air. So go ahead and shoot over any question you have, type it over on the chat there, and we will answer those questions as they come in. It can be regarding any topics surrounding solo 401ks, self-directed IRAs, rollover business startup 401k, and full-time employer 401k plans as well. Please like today's video. Please subscribe to our channel to help get the word out to other solopreneurs like yourself. So, do banks offer a solo 401k? Well, most people's first thought is, I'll just go down to my bank and open a solo 401k, just like I would open a checking account. But here's the catch. While banks do offer retirement accounts, they often don't provide the type of solo 401k you actually may want, especially if you are looking for flexible investment options like real estate, private equity, cryptocurrency, real estate, and so forth. And also if you want to invest in equities. So we're going to be covering this topic at great length today, and go ahead and type over any questions you have during the live chat and we'll answer those as they come in. So what are we going to cover today? So one, why banks only offer limited solo 401ks. Why is that? Well, typically banks don't have the staff to handle these type of self-directed solo 401k plans. So the type that can be invested in not only equities, but also cryptocurrency, real estate, whether it's commercial, residential real estate, as well as trust deeds, precious metals, and even cryptocurrency, to name a few types of alternative investments. So they just don't have the staff that has the knowledge for those types of investments that can be made in a solo 401k. Some banks may offer their own solo 401k, but it's watered down, meaning that not only does it not allow for alternative investments, but it may not allow for investing even in the stock market because it's a bank. So you may only be allowed to invest in CDs, for instance. What is more, from a contribution perspective, most banks that offer a solo 401k, if they do, because a lot of banks just don't offer it, they won't allow for all contribution types, especially if you're trying to utilize the mega backdoor Roth solo 401k strategy, which involves making voluntary after-tax solo 401k contributions up to the overall limit, which, for instance, for tax year 2025 is $70,000. So if you have enough net self-employment income, you could contribute all the way up to $70,000 as a voluntary after-tax solo 401k contribution and convert it to a Roth solo 401k. So that's another big difference between a solo 401k offered by a bank, if that bank even offers it, versus a self-directed solo 401k from a provider like my solo 401k financial. And also, banks don't really make any money off of their own solo 401k if they were to offer self-directed options. because most banks make money off of deposits. So those are some of the reasons why banks either don't offer a solo 401k, or those that do offer a very watered down version. So we've kind of touched on this already. What's the difference between a bank administered solo 401k versus a self-directed solo 401k? Well, a self-directed solo 401k allows you to invest in alternative investments. It allows for pre-tax contributions, Roth contributions, and voluntary after-tax contributions as part of the mega backdoor Roth. It also allows for participant loans, where you can borrow 50% of your solo 401k balance, not to exceed 50,000, and you pay back your own solo 401k plan with interest. Also, with the solo 401k offered by a bank, you will not have checkbook control because there's no need for it, since it does not allow for alternative investments. Whereas a self-directed solo 401k comes with checkbook control, where you can invest in alternative investments, and you would use that checkbook to write checks for making the investments or for paying expenses in connection with an alternative investment held inside the solo 401k plan. A popular alternative investment inside a self-directed solo 401k are real estate rental properties, where the solo 401k invests in that property. Therefore, all the expenses, such as the payment of property taxes or expenses to fix up the property, those would be paid with funds from that self-directed solo 401k. So you use the checkbook to make those payments. All right. Now let's keep talking here. Again, today's topic is, do banks offer a solo 401k? And go ahead and like today's video, subscribe to our channel to help get the word out to other solopreneurs like yourself. And go ahead and type over any questions you have. It does not have to be regarding today's topic. Okay, what you may be missing with bank products. Well, again, if the bank does offer a solo 401k, they may offer their own products like a CD. Whereas if you open a self-directed solo 401k plan, it's going to be an open architecture where you're going to be able to invest in equities, as well as index funds, exchange traded funds, as well as alternative investments like private equity, real estate, cryptocurrency, precious metals, and so forth. So, in short, you have a lot more control when you open a self-directed solo 401k versus a solo 401k offered by your bank. So, where to find true flexibility and benefits? Well, the good news is that a self-directed solo 401k offered by my solo 401k financial, you get to choose where to hold the money at for that self-directed solo 401k. My solo 401k financial has been in business since 2009, and we've helped thousands of clients open up self-directed solo 401ks. And one of the reasons we get a lot of clients is that we let them choose where to hold their solo 401k funds. At the end of the day, it's your money. So you should be able to decide where to hold the money at. So when with a company like my solo 401k financial, you have the freedom to choose where to hold the solo 401k funds at. A common place that our clients like to use to hold their retirement money at is their local bank or local credit union, whether it's a large bank, a regional bank, or a small bank. Those banks will provide bank accounts for the self-directed solo 401k offered by my solo 401k financial. So even though the bank may or may not offer their own solo 401k, they do provide bank accounts for a self-directed solo 401k offered by an outside financial institution like my solo 401k financial. And and they will gladly provide those bank accounts because the solo 401k is not being provided by the bank. Therefore, the bank is now responsible for that solo 401k plan, such as required IRS plan updates. Those types of updates are provided by the solo 401k provider. So my solo 401k financial, for example. Also, the bank is now responsible for performing any type of reporting with the IRS. What type of reporting is that applies to a solo 401k? That is Form 1099-R and Form 5500 Easy, for example. A Form 1099-R is used to report distributions taken from the solo 401k. So let's say you qualify for a distribution because you've met the age, the required minimum distribution age, which is currently age 73, or you're taking a distribution because you have a hardship, or because you meet a triggering event such as you reach age 59 and a half, then you can make a distribution from the plan, but that's going to result in issuing a Form 1099-R. The bank will not issue that Form 1099-R for a self-directed solo 401k. Instead, the self-directed solo 401k provider will issue that Form 1099-R. Not all self-directed solo 401k providers will issue a Form 1099-R. Instead, they will say that your CPA needs to do that. But here in my solo 401k financial, we don't charge additional fees for issuing a Form 1099-R to report distributions or conversions as long as you timely request that Form 1099-R. So that Form 1099-R, in addition to being required if you take a distribution, it also applies if you transfer money out of the solo 401k to an IRA. That requires a Form 1099-R, even though that's not a taxable event, it is a reportable event as a direct rollover to the government. Another instance is if you process a conversion. Let's say you want to convert pre-tax solo 401k funds to the Roth solo 401k. Now that's a taxable event, and it also has to be reported on a Form 1099-R to the government. So even though it's a taxable event, it's not going to subject the plan to a 10% distribution penalty, however, because it's a conversion, it's not a distribution. Now, another instance is if you convert voluntary after-tax solo 401k funds to the Roth IRA or to the Roth solo 401k. That's dubbed as the mega backdoor Roth solo 401k strategy. So we'll issue that 1099-R for all those types of distribution events or conversion events. And while a mega backdoor Roth solo 401k strategy is typically not taxable because you want to convert it right away so that there are no gains, it is still reportable to the government on a Form 1099-R. So keep that in mind. Looks like we've got some questions here. Let's take a look at that. So we got a question here. When calculating my solo 401k contribution, do I base it only on my own net earnings from self-employment? Or must I also reduce it by my spouse's Schedule C loss since we filed jointly? That's a great question. So it sounds like your self-employed business is taxed as a sole proprietorship. So if that's the case, then the contribution to the solo 401k plan is based on your net self-employment income from your sole proprietorship. It is not impacted by whether or not you have a loss for the year based on investment losses or your spouse's losses from her investments. So in short, contributions to the solo 401k plan are based on your line 31 of your Schedule C. So if you have a figure listed on that Schedule C, which is the form that you file. It's an attachment to your Form 1040 when you're self-employed as a sole proprietorship. As long as you have a positive figure and not a negative figure on line 31 of your Schedule C, that's going to be the starting figure for your solo 401k contribution. And you can plug that line 31 Schedule C into our solo 401k contribution calculator found on our website. And then our calculator will reduce the line 31 by 1/2 of self-employment income tax. And then the difference will be the amount that you can contribute to the solo 401k plan. So no, you do not reduce it by your spouse's Schedule C figure. If it's a negative figure or a positive figure, you don't add it either, because the contribution to the solo 401k is based on each self-employed individual's respective Schedule C. Great question. We get that question here and there. Okay, let's see here. We have another question here. Again, please go ahead and type over your questions. It doesn't have to be specific to today's topic, which is, do banks offer solo 401k? It can be regarding traditional 401ks, self-directed IRAs, as well as traditional 401ks, and even the Rob's 401k, known as the Rollover Business Startup 401k. So we have a question here from Calvin. Am I able to use my solo 401k funds to invest in a movie production? If so, the contract has to be in the name of the trust, correct? Great question. So, number one, I presume that this is not your own movie production. If it's going to be your own movie production, then you could do it indirectly through the solo 401k by borrowing from the solo 401k plan through a participant loan, where you can borrow 50% of the solo 401k balance, not to exceed $50,000. So the maximum loan would be $50,000, and then you can use those proceeds that you borrow from the solo 401k plan for any purpose, including for investing in a movie production, if that's something that you want to do. And that would be considered a personal investment, and then you would have to pay that loan back to the solo 401k plan with personal funds, because you're the one borrowing from the plan, and you would pay that loan back over a 5-year period consisting of principal and interest, and you would pay back either monthly or quarterly, with all the payments flowing back to the solo 401k plan. Alternatively, there's another option known as a rollover business startup 401k, the ROBS 401k, but that's used if you're going to invest in your own business, where you are going to have to work for the business as a W-2 employee, and it has to be a C corporation, and that entails opening up a bank account for that C corporation. Again, you're going to have to work 1,000 hours for that C corporation. Then the ROBS 401k, which is different from a solo 401k, is adopted by that C corporation. Then you transfer an IRA or a former employer plan to this new ROBS 401k. The ROBS 401k is then invested in the C corporation, where the ROBS 401k becomes a shareholder, a common stockholder. So now the ROBS 401k owns the corporation, and you are a W-2 employee, and you can use that to fund your own movie production business. Now, another option is if you're doing this as a passive investment, meaning that A, this is not your own movie production business, nor a family member such as your spouse, children, or parents, because they are disqualified parties, and you cannot perform solo 401k investments with disqualified parties. Then you could invest in that movie production through your solo 401k. You could do it as an equity investment or as a promissory note. If you do it as an equity investment, then that may trigger a tax known as unrelated business income tax to the solo 401k, because it would be deemed business activity. When you invest a solo 401k as an equity investment in a business that offers goods or services, that triggers a tax known as unrelated business income tax that was put forth by Congress to even the playing field for those that do not use retirement funds, but rather personal funds to invest in a business that offers goods or services. And that tax, unrelated business income tax, is paid by the solo 401k, and it's typically around 38%. So it's a pretty high tax. The first $1,000 of gains from that investment in that business that offers goods or services. So if that movie production is considered a business, which it probably is, then that tax is going to be triggered. So let's say that the solo 401k receives $10,000 investment return from its investment in that movie production that was meant as an equity investment. The first $1,000 will not be subject to that unrelated business income tax, but the other $9,000 will. So multiply 38% times 9,000, which is around $3,500. Rough math. That means that you're going to have to pay. Well, not you. The solo 401k will have to pay $3,500 in unrelated business income tax. So your solo 401k will still profit, just not as much, because it's going to have to pay that 38% unrelated business income tax. Now, if you do it as a promissory note investment instead of an equity investment, that will not trigger unrelated business income tax. Also, if that movie production business is structured as a C corporation, that also will not trigger UBIT. But back on the promissory note, the promissory note is when your solo 401k funds lends money to a company or an investor, as long as it's not you. So let's say that the solo 401k performs a promissory note, that is, it lends money to that movie production business. That means that that movie production business is going to guarantee that it's going to pay that solo 401k a certain percentage, let's say 10% on a yearly basis. So that 10% will flow back to the solo 401k and grow tax deferred. And that will not be subject to UBIT because it's a promissory note investment. It's not an equity investment. Also, when drafting that promissory note, make sure that you document that promissory note. We have a great procedure on our website regarding investing in promissory notes. Let me share that procedure with you. Among other things, you're going to list the solo 401k as the lender, aka beneficiary. The borrower would be the movie production business. On the promissory note, you're going to list the interest rate, whether it's going to be a principal and interest payment or with a final balloon payment, or if it's going to be a balloon payment consisting of interest and principal at the end of the term. Don't confuse promissory notes with solo 401k participant loans. When you borrow from the solo 401k personally, that's known as a participant loan. I'm talking about a promissory note where your solo 401k lends funds to an outside party, not to you. Let me send over an information about investing in promissory notes for a solo 401k. A good question. Okay, here's the link from our website regarding investing in promissory notes. All right, again, please subscribe to our channel. Please like our video to help get the word out to solopreneurs. Today's topic is new banks offer solo 401k. Go ahead and type over any other questions you have. It doesn't have to be surrounding today's topic specifically. We got a question here from consultant. Question is, what's the deadline to file a 1099-R, and how do we submit the request to your company to have it prepared filed? So the Form 1099-R, as I mentioned earlier, is used to report distributions or conversions or both taken from the solo 401k plan during the year. Therefore, if you process a conversion during the year, a distribution during the year, it's going to be taxable in the year that you actually made the conversion if you're converting pre-tax funds, if you're converting voluntary after-tax funds, it's not taxable unless there are some gains. Then, and if you're processing a distribution and it's also taxable in the year that you process the distribution. For example, if you process a distribution and or a conversion here in 2025, you need to do so by December 31st of 2025 if you want to count it for tax year 2025. So that means you need to make sure you move the funds from the applicable solo 401k holding account to the Roth solo 401k. If you're doing a conversion, you would need to do that by December 31st of this year to count for 2025. If you're likewise, if you want to process a distribution in 2025, those funds have to leave the solo 401k by December 31st of 2025. You then need to make sure that you report that conversion to us by completing our online conversion form or distribution form so that we collect the necessary information to issue the Form 1099-R. If you process any of those transactions in 2025, that Form 1099-R is issued to the IRS and to you by early year 2026 if you do those in 2025. Let me send you a link to our forms tab where you will find the conversion forms and the distribution forms that you want to complete after you've moved the funds out so that you know the amount that was converted or the amount that was distributed in the case of a distribution. There's the forms tab of our website. I'll just share that link. We have online forms that you complete to communicate to us whether you took a distribution and or a conversion so that we collect that necessary information to issue the Form 1099-Rs. All right, let's see here if we have any other questions for now. Looks like we've got a question from a follow-up question from Calvin. Oh, wait a minute. No, from Andrew, excuse me. So the question is, if I open a solo 401k under Robs, so again, a solo 401k is not used for Robs. That would be a Robs 401k. It's a different type of 401k. It's known as a rollover business startup 401k. Let me share a link from a website regarding the rollover business startup 401k, aka business financing 401k. That's completely different than the solo 401k. So let me share that right now, and then I'll finish answering your question. So there's the link. So no, it's not considered a contribution from the 401k when you invest the Rob's 401k into the corporation for your business. Which again, you have to be a W-2 employee and work at least 1,000 hours. It has to be a C corporation. Those are the Rob's 401k requirements, or I should say some of those. So no, it's not a contribution, it's an investment. When the Rob's 401k invests in the corporation, the funds from the Rob's 401k bank account are wired to the corporation's bank account, and that's known as an equity investment. So the Rob's 401k will receive a stock certificate reflecting how many shares of private stock, common stock, the Rob's 401k purchased in that Rob's 401k funded corporation, in your case, the movie production business. If that's what you used it for. But it's got to be used to fund the business that you will operate. It's got to offer goods or services. We do offer the Rob's 401k, and if you want to pursue it further, you should schedule a call with one of our consultants and we'll go over that whole process with you because it's a whole different animal from the solo 401k. So thank you for your question. Okay, let's see here. What other questions we have? Another question here. Under the Robs, is there a limit to the amount of 401k that can be used by the business? No limit at all. You can invest $100,000, $1 million. If you're going to invest $50,000 or less, however, it may not make sense to utilize the Rob's 401k because of the cost to open it, as well as the ongoing high annual fee, because it's a whole different animal. It's got all different types of IRS reporting. There's a lot more red tape involved. Okay, but the great thing about the Rob's 401k is that you can finance your own business without going into debt by utilizing your Rob's 401k. And you can also use it by utilizing a small business loan as well. So there's a lot of things you can do with the Rob's 401k from a funding perspective. All right, let's see here. What other questions we have? We got a question here from Young. Do we need to file any form for 401k contributions? No, you do not. Why? Because contributions to the solo 401k plan are reported on your personal and your business tax return, depending on your type of self-employed business. Let me send over a link from our website that talks about where to report solo 401k contributions. And we've done a good job of breaking it down per self-employed entity type as to where to report it, as well as contribution type, that is pre-tax, Roth, and voluntary after tax. So let me share that link here with you. Here, I just shared that. So that it's a great link there that'll guide you as to how to report solo 401k contributions. They are reported on your tax return, personal and or business tax return. Now we do have a form on our website, on the forms tab of our website, and I shared a link earlier to the forms tab of our website, and you can get to that forms tab of our website by going to the very top right hand corner. It reads forms. Click on that. There's a paper form you can use, and that would be for your own records. And again, it's not a requirement. You can fill out that form to show how much you contributed and keep it in your own records. But the bank or brokerage account for the solo 401k plan will also track those contributions, and then you report them on your tax return. But that form can be used. You do not submit that to us. You keep that for your own records. All right, great questions. Again, today's topic is, do banks offer solo 401k? We've been talking about it at great length. Go ahead and continue to type over your questions during today's live webinar. Again, we'll be live again today in a couple hours. We typically go live at least once a day, many times twice a day. It's kind of like football season during training camp, 2-a-days. So I know college football season starts this Saturday, so looking forward to that. Okay, so back to today's topic here. Do banks offer solo 401k? Let's keep taking a look at that. We've been talking about that for a little while now. And let me get to our next slide here. So we talked about how banks and credit unions do offer bank accounts for self-directed solo 401k plans offered by My Solo 401k Financial, which can be used to invest in alternative investments. You can even invest in bank CDs if that's important to you. You can also utilize the Mega Backdoor Roth strategy. You can borrow from that self-directed solo 401k plan. And that is all possible because the plan is offered by My Solo 401k Financial. When opening up that bank account at the local bank, if your local banker has any questions, we'll gladly speak to him or her to shepherd them through how to open up the bank account for the self-directed solo 401k. We also have a banking guide that we'll provide. The bank typically asks for a copy of the solo 401k adoption agreement, the EIN number for the solo 401k, and we'll provide all that to you to provide to the banker. And again, we can schedule a call with the banker to shepherd them through the process of opening up the self-directed solo 401k using the solo 401k EIN number. Now, clients of My Solo 401k Financial can also utilize Fidelity or Schwab for brokerage accounts for the self-directed solo 401k offered by My Solo 401k Financial. So while Fidelity and Schwab also offer their own solo 401k. They also offer what they refer to as non-prototype company retirement brokerage accounts for a self-directed solo 401k offered by an outside solo 401k plan provider like my solo 401k financial, which comes with checkbook control. And we'll help you open up those brokerage accounts. So while they offer their own solo 401k, it's a watered down version, but they do provide those brokerage accounts for a self-directed solo 401k offered by my solo 401k financial. And you'll be able to invest through those brokerage accounts in equities, as well as CDs, as well as real estate, promissory notes, private equity, because the plan is offered by my solo 401k financial. And you can also take a 401k participant loan. And we would draft those solo 401k plan documents. And just like with the bank account for the solo 401k, we, not the bank nor the brokerage firm, would assist you with the ongoing plan updates and the required compliance reporting for the plan. So when should you consider a self-directed solo 401k plan? Well, that's pretty easy to answer. You want to consider a self-directed solo 401k plan if you want to invest outside of Wall Street. So you want to invest in alternative investments like cryptocurrency, real estate, private equity. Also, if you want to be able to borrow from the solo 401k plan. Also, if you want to utilize the Mega Backdoor Roth solo 401k strategy. And if you want to have expert support from a company like my solo 401k financial, who's been in business since 2009. So we are well versed on all the rules and regulations. We're also well versed on rules regarding transferring IRAs, former employer plan funds to the solo 401k, and also knowing what that particular financial institution that's transferring the money out of IRAs or 401ks require to transfer those funds out, among other things. Okay, so again, if you're looking to understand whether or not you should open a self-directed solo 401k versus a solo 401k offered by your bank, then you can later come back and listen to this recorded webinar again. We're going to post it on our YouTube channel, so you can listen to it anytime you please. We're coming to the end of our webinar. It looks like we've got one more question in here. We'll go over that question and then we'll finish today. Finish for today, I should say. Question here. If the funds are in a different bank other than the one offering the CD, can we write a check for the CD deposit? No, you cannot. You would have to open up a bank account with that other bank as well. And you can have multiple bank accounts for the solo 401k. So you would open up that bank account with the other bank that offered that CD. You would open up the bank account in the name of the solo 401k and then purchase the CD. Because again, if you send the money out of that solo 401k bank account to your personal bank account and then purchase the CD, that's going to be considered a taxable distribution. So when you invest in CDs, which can also be done through the Fidelity brokerage account or Schwab brokerage account that is offered for a solo 401k offered by my solo 401k financial, that would be made inside that holding account for the solo 401k. So that's important to understand. Great question. All right. Thank you for joining today's daily webinar. We'll be live again in a couple hours and we'll be back again tomorrow as well. Until next time, make it a great day. Bye-bye.